On March 11, 2026, the International Energy Agency authorized the release of 400 million barrels of oil from emergency reserves. This intervention responded to a severe disruption in the Strait of Hormuz, where conflict restricted the movement of tankers through the world's most critical energy artery. The decision transformed strategic petroleum reserves into an active, frontline policy tool, moving them out of the background of energy security. The 2026 crisis centered on a physical logistics failure. While upstream production continued, major shipping lanes through the Middle East were blocked, stranding barrels behind the obstruction. This map shows the Strait of Hormuz, normally carrying about 20% of the world's oil and significant liquefied natural gas. At the 2026 conflict's peak, transit flows through this choke point fell by more than 90%. This price chart shows Brent crude passing $100 a barrel in early March, for the first time in 4 years. Prices peaked significantly higher, creating the largest supply disruption in the history of the global oil market. Because the crisis was a physical blockage rather than a production shortage, the only effective policy response was to release barrels already located past the choke point. To manage the shock, 32 IEA member countries unanimously activated the 90-day stockholding obligation. These public emergency stocks collectively exceed 1.2 billion barrels. This diagram illustrates the phased release of 400 million barrels. Asia-Oceania members made stocks available immediately, while members in the Americas and Europe followed at the end of the month. This coordinated supply management acts as a circuit breaker. It provides a cushion of several weeks while the underlying transit disruption is resolved by other means. A 400 million barrel release can steady a volatile market, but it cannot replace a major global artery. The 2026 crisis demonstrated that strategic reserves are a mitigation tool, not a permanent cure. The episode proved that energy security is a matter of geography. The value of a barrel is determined by which side of a choke point it occupies. When a single choke point can remove millions of barrels a day, physical delivery becomes more critical than baseline price. This shift has turned logistics resilience into a primary commercial risk for energy buyers. As a result, B2B procurement teams are now scoring suppliers on 3 specific criteria: supply chain resilience, logistics redundancy, and price risk management. The long-term advantage now belongs to organizations that engineer physical resilience in advance, rather than those forced to improvise once a primary transit route is closed.